What is going on, everybody? Welcome back to another YouTube video. So in this property, you guessed it, I want to talk about LTC properties in this video. So with that being said, I don't want to waste any time. Let's go ahead, cue the intro, and jump right into this one. I've been getting dirty money. Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's gonna help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video. Okay guys, I'm glad it's been a week since I've been back here. I was really thinking about what's going on in the world and kind of where we're at, what's a good investment, what's a bad investment. Like I said in the last video, I believe I'm kind of sitting on a little bit more cash than what I normally do. Now, I am actively looking for investments, of course. I'm always looking for another investment. So when I say this is, though, I'm looking for something that there's a book out there that I believe everybody should read, and it's called The Richest Man in Babylon. And you should not want to lose your principal. That is the biggest thing. Now, you guys have heard me talk about QYLD and how it has its massive dividend income. I love its dividend income. I'm going to be right there with you guys. And you guys got to remember, I used to own quite a bit of it. But why I don't like it is its principal keeps going down. And what I mean by that, and let's just look at it, and this is something I believe everybody should be looking at every single one of them. So just this year, you're down 7%, but max overall, it continues to fall. And it's just not being steady. So we want to go to LTC properties, and I just kind of want to give you a background on LTC. So if you don't know what this company does, you can go right here to Investopedia. LTC Properties right here manages a portfolio of senior living, housing, and long-term care facilities, including skilled nursing, assisted living, independent living, and memory care facilities. Currently owns 159 properties in 27 states. LTC primarily earns its income by leasing its properties using triple net leases and investing in mortgage loans. As of July 2021, an annual dividend of $2.28, which is about 5.86% per year. Now, there are some other ones. Again, you see Stag here, and there's some other ones, Aging and C and things like that. But this one's going to work in assisted living, nursing homes, basically, things like that. Now, I always like to go back here, and I want to see the dividends, I want to make sure that our dividends are getting higher. So the one thing I don't really like about this is it didn't go up for quite a while. So you were stuck at 17 for quite a while, you were stuck at 18 and then 19, and then now it's really not moving for way more than what it should be. It should have bumped up to about that 20 cents by now. Now, of course, we did go through a pandemic and things like that, so you do have to be aware of those issues. I'm not saying you don't have to. And it's $37.33, which means you're going to get a decent amount of shares, if you per $1,000. It means you're going to be able to buy more and more. And once you get up to about $3,700, you're going to have about 100 shares of it, and it's going to pay you decently. If you just do the calculator here, 100 shares times 0.19, pretty simple math, you're going to have $19 a month. So not awful when it comes down to the monthly dividend income. It seems to be a solid company so far. Now, my biggest problem is the max. So it did do pretty well, and it does do better than QYLD, so I think I would rather invest into this than QYLD for overall. But I actually have family that works in the assisted living, and my dad works in it, so I kind of understand the business model. I'm not a huge investor in LTC, to be 100% clear, transparent, guys. This is not a company that I am jumping for joy, and I'm going to tell you why I don't really invest into this company, but I want to cover it for you guys and let you guys make your own decision. So we're going to go over here to the backtest portfolio. So I do like assisted living, by the way, 110%. So you guys see this. We're going to start with $10,000. And you guys can just fill these in. We're going to include year to date. Yes, we're going to put $500. That's the average monthly car payment in America. Or what we can do is we can put $400 because that's $100 a week. I believe anybody can do that. We're not going to adjust for inflation. We're going to do that monthly. We're not going to do any rebalancing, no leverage. This is just straight cash going into it. We're going to reinvest all dividends. We're going to display the income because that's why we're investing in the LTC, is we want to see dividend income. And I mean, otherwise we would go invest into growth if we're not looking for that dividend. So factor regression, no, we're not doing anything like that. We're going to compare it to SPY, which is the S&P 500. Overall, if you just put your money into SPY and never touched it again, like Warren Buffett says. But we're also going to compare it to a couple of others. So Gladstone Capital, which is another REIT, LTC, which acts as a REIT, because again, it is a REIT just for assisted living. And then O is a very popular stock, and they seem to do very, very well. They own a lot of Walmarts, Walgreens, CVS's, things like that. If you haven't seen that video yet, look on my channel. There's a video going over O and why it actually is a pretty solid investment if you like real estate. Another thing you guys got to be looking at with real estate right now is rates are going up. So did your company that you're investing in do well with buying in or getting more loans during when money was basically just dirt cheap, and allowing themselves more money to work with to make money at higher interest rates? That's something that, I've been looking at personally. So you can see it here. Gladstone obviously not doing well here compared to the others. It's under it pretty quick. LTC actually doing pretty well. I'm not going to lie here. If you started back in 2003, 2004, and it does really, really well. It's actually going to outperform the S&P. And you're going to see another one that's actually outperforming the S&P. The S&P is green. O. The O is another stock that, again, like I said, they own Walmarts, they own Walgreens, CVS's, I believe even Home Depot's, Dollar General's, things like that. I actually love O, and I do own shares of O. I've sold out of them a couple times, and I've bought back in. I do like that company. O raises their dividend pretty much every single year, so I do think it is smart. In order to own 100 shares, though, you're looking at about $6,800, I believe, is where you're at probably right now. But if you look at your overall here and your income, Glad's obviously not going to be, it's about half of what O is here for your overall balance. Now, we're going to go down here and we're going to look at income because we always want to look at income. So when we get down here, this is where the big differences come in. Obviously, SPY is not going to have near as much income as any of these. But, again, you have the compounding effect. And you also have O, which is keeping up and beating Glad in dividend income, which that is Glad's thing, is they want to show dividend income for investors, and that's why people invest into them. Me, LTC Properties looks better than Glad. If I have to look, and again, let's look at their overall. We want to see. Oh, I misspelled it. That's my bad. I want to see their overall. Go to their max. It's really not good. And that's something, again, we're looking for. You want to look at all of these factors all together. But if we're looking at income, O's actually really, really good. Guys, I'm not going to lie to you. I like O quite a bit. But you have LTC, which is outperforming it by quite a bit. And you can see their dividends are getting higher. You're able to buy more shares and continue the growth of it. Now, again, with the real estate market crashing or looking like it's going to crash possibly according to a lot of gurus and things like that and financial analysts, things like that, it is something that you may want to be careful about. But when they're able to rent and be at capacity of 100%, continue to make money on their properties, I don't think your overall capital is at risk that much with these companies because they're going to continue to pay that dividend and it's going to pay it back a little bit quicker than a lot of them. Now, if you're looking at one stock to just stick all your money into, I don't think you should stick all your money just into this for real estate or something. If you have 10 grand, you're probably better off going and buying a property that's going to cash flow you $200 a month every single month before you do this. But if you're not there yet and you want to just continue to put money away and get dividends and allowing it to grow, it does look like O or LTC is a good stock to buy. It's going to pay you a dividend every single month, and you're going to continue to be able to grow your money. Again, it's better than sticking it into a 401k and you get a match, but by the time you pay fees, and I've been preaching this, guys, please listen to this. If you put your money into a 401k, figure out what your fees are, because your fees are probably killing the match that your employer puts into it. You're probably better off putting it into a Roth IRA or something like that. I'm not a tax advisor or anything like that. I'm just doing this based off of my personal experiences and what I have seen from other people's 401ks. But you get to make your own decision on here. Me, I do like LTC. I'm probably liking the safer bet of O though, but if I had to choose between the two, I'd probably split my money 50-50, get some LTC and get some O. And now if you're looking more towards dividend income, maybe you do 75-25. 75% of your money is going to go into LTC, 25% of your money is going to go into O. O is going to try to get you that more growth overall, obviously here in LTC, and you can see LTC is dipping now here below the S&P 500, but I do believe LTC is going to end up working its way back as long as the real estate market and the whole stock market doesn't dump. Remember, there is risk in every single trade you take, no matter what. So with that being said, thank you guys all for watching this video. I hope this helps somebody out, and I will see you guys in the next one.